National Australia Bank cuts rates. Let's have a look. Good morning, everyone. Florian here, and welcome to another episode of Heise Says. Grab your stein of coffee and let's have a look at this pricing update from National Australia Bank. They have cut their interest rates, everyone. They seem to be lining up with some of the other banks. Now, before we have a look at that, let me just bring up not that information. This chart here, which is showing you the current cash rate at 3.6%. And when we last looked at the ASX prediction yesterday, there was a 0% probability or prediction that rates would increase this next month. We haven't flipped over yet, Florian. Calm down. It's going fast, isn't it? This year, it's already 4 months in. What's going on? So that's probably a topic to complain about in another video. But this is the pricing update sent to me by a viewer. Thank you very much. So, National Australia Bank has today announced changes to the NAB Tailored Home Loan and Choice Package, fixed interest rates, as well as changes to its base variable home loan product. These changes are effective Friday the 28th of April 2023, so as of today. And if we have a look here, we can see 1 year loan LVR of 60% or less. The old rate was 6.04%, principal and interest. So 60% or less, that's, you're doing, well, you've had your property for some time, you've gained some equity in your property. It's going from it's going down 15 points to 5.89% with a comparison rate of 6.81%. Interest only in arrears, you're down to 5.99. Interest only in advance, you're down to 5.89. Now, the interesting thing is if we compare the low LVR to the 80% or more, you're going from, 5.89% to 5.94%. This is if you're fixing for 1 year. Let's look at interest only in advance. It's going from 5.89 up to, they only give you an option to fix, you're only allowed to be interest only. Interesting, if you've got an LVR of 70 to 80%. There we go. So that's something to consider for the people that have purchased during the mania. And maybe there's been a little bit of a hit in the valuation of their property. Their LVR may not be as strong as it is. But if they paid the biggest one, the only issue I can really think of are the people who went in with the 2 and 5% deposits. Now, that's only about 10,000 people. So it's not as scary as America, guys. When people are comparing Australia to America, our politicians, it may feel like they're just as stupid as they are, but they're not. They've capped their promises, which is very good. I'm very glad that they've capped it. So there's going to be some people that might be in trouble, but hopefully those government-backed loans or government-guaranteed loans that gets you out of the mortgage, the MLI, Mortgage Lenders Insurance, they're not borrowing too much. There was a cap on it, like 700 grand. So you'd hope they go to areas where we haven't seen as drastic a move as others. But we'll have to wait and see. So 2 years. Well, let's jump ahead to 4, because that's what I locked in. So I'm like many of you viewers, we saw the cash rate go insanely low and locked in at 1.99. Some viewers locked in lower, some viewers locked in for longer, others shorter. But here's the thing, depending on your LVR, depends on where you're going to sit on this. So let's say, you're like me, I locked in for 4 years, and I want to lock in for another 4 years. What's the impact going to be if I were to lock in at another fixed rate? Just for peace of mind. I had a viewer ask my suggestion, or my opinion. They locked in for a certain period now, I think about 5% or something. The rate is irrelevant. And they said, what is it a good idea? And my argument to them was, you've got to think about it. You're locking in for so many years. I think it was 3 years. That means for those 3 years, you have certainty over one of the biggest expenses that you're going to encounter, your mortgage repayments. I think for us, food is probably more expensive, but we have a huge family. But for most people, it's probably their biggest expense. Hopefully it is. You're not wasting money on Funko Pops or anything. And that means for those 3 years, you're set, you're certain. Now, what is the best case scenario for you with regards to the savings you made on your mortgage. Probably not for the economy, is if rates keep going up, then you've saved money because you were smart and locked in. Now, what if rates go down? What if that 5% interest rate you locked in goes down to 4%? Or, you could even get a 3% rate. They've just gone stupid again. The thing is, the opportunity cost, the potential loss you made by not being variable and locking in a later date, that is, thousands of dollars, maybe $10,000 over the period, depending on your loan. You've got to do the sums yourself. But is that potential savings, which you could make up in the future if you pay more or find other ways, is that worth the certainty and the reduced stress you've had over that period for lock-in? That's what you need to think about. You need to look at it like that. Stress and just day-to-day life needs to be a part of the decisions you make. Even when you go and seek a broker or a professional, just think about that. Think about your day-to-day stress. It's not about having piles of money. It's just being relaxed. Isn't that the secret to life? You can tell I'm getting old, can't you? So, let's say, okay, let's have a look. So you're going down 30 points to 6.04% or to 6.09. And we jump over to our Excel spreadsheet. Let's say you're going from 1.99, which is a fixed rate a lot of us had, and you've got a good LVR, 60% or less. You got 6.04, and the 479, that's the first home buyer mortgage. And this is based on 30 years still left, which it's not going to be that. It's going to be better over the period, but that adds a level of complexity that I can't be bothered. The argument is going to be what this number is here, what this percentage is here. So say you go from 4 years to 4 years, you go from 1.99 to 6.04, you're looking at a 63% increase in your repayment rates. But you have to remember, this is a scary number. They're going to talk about the mortgage cliff. The media will play it up. We'll see sob story after sob story, I guarantee you. Because this sounds scary. And that gets the clicks and the eyeballs. And journalists that have to be getting a bonus if their articles attract more attention and make more ad revenue. You'd hope they do. So, there you go. 60% increase in your mortgage repayments. That's the difference is another $1,100 a month you have to find for this first home buyer mortgage. We change this number to the Australian mortgage average. You're looking at nearly $1,300 a month extra you have to find. Now, if your LVR, if we jump back here, if your LVR is down here, so 80% or more, and remember this is principal and interest, you're going from, 6.39 to 6.09, so a tiny increase. 6.09, and we jump over here. You're still looking at a 64% increase in your repayments. But what about okay, you're in trouble. You're in trouble. You've bought too much. Maybe your partner has lost their job. Business is slowing down. You're going to struggle to make repayments. And you hear all these people talking about interest only. Well, let's look at that. So let's say you want to go interest only in arrears, and we're going from, your LVR is 70 to 80%, so the worst you can possibly get it in. So you're looking at either arrears or advanced 6.94 or 6.98. Let's go to 6.98, interest only in advance. What's that going to mean to this person here? So if we go here, remember, principal and interest, you're paying $1,200 a month, but 6.98. Wait a minute. I can't figure that out with my formula. I can't. Hang on. I've got to change. Okay. Let me update my Excel spreadsheet. Through the magic of editing, I'm now back, and I haven't updated my Excel file because, Rachel appeared and I went and had breakfast. It was a lovely stir fry with some scrambled eggs, a bit of onion, 3-year-old aged cheddar, and some cottage cheese. It's funny, one of our children, she only likes cheese that's literally older than she is. So, there you go. So, but while I was chowing down on my breakfast, I thought rather than updating this, which I really should, I can just cheat and go to the website calculator here and look at interest only. So 3 years, and the interest rate we were looking at is 6.44 is the highest. So 6.44. Looks like I was referring to the... Oh, come on. There you go. This is what happens when I go. Okay. 6.44. And the current loan balance will say 545. Okay, that's roughly 545. We want 3 years at interest only. Your monthly repayments are going to be $2,925 as opposed to $3,600. Oh wait, no, hang on, 6.44. 6.44. That 9.8 is the comparison rate. So from rather than paying $3,400, you're looking at only paying $2,925. So almost a $500 saving per month for those 3 years. But remember, this is interest only. You're not paying anything off on the principal. So there's circumstances when people do it. I remember colleagues were bragging about doing this when property was going up and just buying one and another and another. But remember, we looked at a story years ago now of a teacher, an ex-teacher, retired, who'd bought 5 properties, all interest only, and then he was freaking out because he couldn't earn any rental income. Remember when they brought those restrictions in? So, yeah, but this could be an option that some people may resort to, but only if your LVRs meet the requirements. So if you could be trapped. It's like the people with the LVRs that are not good enough with regard when considering the buffers that APRA puts on the banks. So let's jump back over. Okay, let's jump back over here now that I've got everything working. Oh, it's fun when you lock your computer. I have to restart all my recording software. It's awesome. So 5 years, LVR 60 or less, we're seeing the decreases are 25 points, interest only in arrears 50 points, interest only in advance 50 points. We're going, the highest rate is, 6.25, arrears 6.64 and 6.54. We have a look here. Here's LVR, tiered fixed rates, residential investment. These first ones were all owner occupiers. So investors, and we can see they can only fix, 4 years. They can do interest only in arrears. And what's the lowest rate? 5.99. No, 5.64. So the sweet spot is 5.64 for 3 years with an LVR of 60 or less. And we can see here 5.94, 6.54, and 6.64. Look at these high comparison rates. They're getting up there. These are getting expensive. And then if you go to the choice package, we can see here, principal and interest, it's decreasing all down. Everything seems to be, it's almost, the top 3 are below 6%. Here again, residential investment, the top first 3 years are below 6%. So rates are starting to creep back down. It looks like NAB is aligning itself with the other banks. So let's have a bit of a talk about this. So there we go, everyone. NAB has reduced their interest rates, probably to line up with some of the other banks. It's going to be interesting to see what happens moving forward, particularly the discussion of the mortgage cliff, the people who are coming off their low, insanely low, and we all know it's insanely low fixed rates, to either variable or other fixed rates in the future. We'll have to see what happens. As always, thank you for watching. Like, share, and subscribe. Check out HiserBim and HiserDoes for other content I discuss. And if you're a fan and want to enjoy the channel, you can support us on YouTube or Patreon, use our referral links, buy our pocket squares, or call us if you need an architect. Take care, have a great day, and I'll see you in the next episode of Heiser Says. Bye for now.